It all began with a fascination for toys. In the 1980s, a young Canadian businessman named David Goldhar started importing novelty toys from Asia and selling them across Ontario. He and his wife Marilyn lived in Ontario throughout this story, building a career that took their small operations onto the global stage. Over time, David's importing venture grew into a serious international toy business. His partnerships led him to WowWee Limited, a Hong Kong based company famous for its robotic and interactive toys. Thanks to his sales expertise, he became director of sales and marketing, part of WowWee's senior management team, where he was responsible for global sales. He was an employee but also indirectly owned a small stake in the company through a Hong Kong holding corporation called Rich Point Asia Limited, which held about 6% of WowWee. At home, he managed a numbered company, which was a holding company he owned outright. Now, as the cross border operations expanded, he needed a structure that could handle international transactions smoothly. So, in March 2006, he incorporated Beanteek Enterprises Inc. under the laws of the British Virgin Islands. Initially, Beanteek's shares were owned by his Canadian company, but later that year they were transferred directly to him, making him Beanteek's sole shareholder. On September 12, 2006, he transferred all of his shares of Richpoint Asia Limited to Beanteek Enterprises Inc. under subsection 85.1 of the Income Tax Act. In exchange, he received a significant number of shares of Beanteek, bringing its total to 8 million, all owned by him. From then on, Beanteek owned Richpoint Asia, which in turn held a small ownership interest in WowWee Limited. This created a global network, that is, the numbered company in Canada, Beanteek Enterprises Inc. in the British Virgin Islands, and Richpoint Asia Limited and WowWee Limited in Hong Kong and China. Then came a turning point. In December 2007, WowWee Inc. sold its assets to Optimal Group Inc., a Canadian public company, for a mix of cash, shares, and warrants. Now, because Richpoint Asia owned part of WowWee, it received a dividend from the sale, about US $2.96 million in cash, plus Optimal Group shares worth US $606,000 and warrants worth US $94,000 paid up to its parent, Beanteek. The shares, certificates, and warrants were issued in David Goldhar's name, a detail that later drew CRA's attention. Between 2008 and 2011, Beanteek's account showed several large transfers, about 2.3 million, 1.3 million, 1.19 million, and 16,000 in successive years. CRA auditors later treated these as personal shareholder benefits, but the records showed that they were business loans and repayments within the group. For instance, on January 9, 2009, 2010 Limited, another British Islands company connected to the group, repaid 1.2 million Canadian to Beanteek, and on March 24, 2011, WowWee repaid 536,000 Canadian, both genuine commercial transactions supported by promissory notes. Around that time, offshore companies were all over the news. You probably remember the Panama Papers, when global tax havens made headlines in 2016. In that same wave of scrutiny, CRA's offshore compliance team began taking a closer look at cross-border structures, and Mr. Goldhar's case landed right in that spotlight. Years later, CRA reopened those years for audit, covering 2008 to 2011, and even went further. The reassessments were issued after the normal 3-year limitation period. CRA can only reassess that late if it proves misrepresentation caused by neglect, carelessness, or willful default. In this case, it could not. The reassessments also added gross negligence penalties and foreign reporting penalties for late T1134 filings. That's the form Canadians must file when they own 10% or more of a foreign corporation. It reports who owns the company, what kind of business it carries on, and how it connects to Canadian income. It's required every year to keep CRA informed about any foreign affiliates a taxpayer controls or invests in. During the audit, CRA never interviewed Mr. Goldhar, his spouse, his accountants, or even his lawyers, nor did it seek information from foreign tax authorities, only public filings from the US Securities and Exchange Commission. Meanwhile, the Goldhars had been methodical. Marilyn Goldhar coordinated yearly documentation for their accountants. When CRA requested clarification about the 2008 T1134, Mr. Goldhar asked his accountant to fix it. And when it wasn't handled properly, he immediately changed accounting firms to ensure compliance. That proactive decision later became a cornerstone of his defense. The court concluded that on the balance of probabilities, Mr. Goldhar exercised reasonable care in his tax reporting, and that the care exercised was that of a wise and prudent person. He engaged professionals, provided complete information, and took corrective steps whenever needed. Given the complexity of this international operations, that was the level of diligence that is expected of a reasonable business person. On gross negligence penalties, the court referred to Wen versus the Queen, which is a 1984 case law, which defines gross negligence as conduct bordering on intentional disregard for the law, and found nothing close to that here. On foreign reporting penalties, it cited Cheong versus R, which is a 2017 Tax Code of Canada case, confirming that due diligence is a valid defense when taxpayers take all reasonable steps to comply. Ultimately, CRA could not prove any misrepresentation or carelessness. Many amounts were mistimed or mischaracterized, and both the reassessments and penalties were fortunately vacated. What protected him was not luck, it was structure, documentation, and steady collaboration with his advisors, even with companies spanning Canada, Hong Kong, and the British Virgin Islands. Every transaction had a clear purpose and paper trail. For business owners expanding internationally, this case is a reminder that compliance is built through planning and partnership. Keep your T1134 foreign affiliate reports current, document every transfer, and seek expert guidance before issues arise. CRA cannot impose gross negligence penalties when a taxpayer relies on qualified professionals and acts in good faith. I'm Amandeep Singh from Cloudverse CPAs in Burnaby, where we help business owners find clarity on complex tax landscapes like Google Maps for income tax journey. Thank you for watching my video, and I'll see you in my next video. Thank you. Bye.